So I wasn't even planning on making a video today, but I really wanted to talk about something interesting as I gain more discretion, as I have more experience in the market. Psychology wise, I feel like I've been seeing a lot of progress, especially with this new model that I've been learning and practicing with. I haven't really implemented it yet onto any evals or live accounts or anything like that, but I definitely can see a change in the way I'm looking at the market, the way I'm trading, and again, just my psychology overall. Let's get into today. I'm going to go over what I do pretty much every morning for pre-market. I load up Forex Factory. I check to see if there's any news. I saw that for the US dollar, we had core retail sales and retail sales news. Red folder impact dropping at 8:30 a.m. So let's hop right into the charts and let's look at first that 8:30 a.m. candle on the 1 minute time frame, and then second also get into pre-market. So 8:30 is right over here, and as you can see, there wasn't really much of an impact. I mean, it's just retail sales, like it's not like a crazy, economic or financial news event like CPI or PPI from last week. So I'm not really expecting much to change or happen on the charts. So I wasn't really looking to use these as draws and liquidity throughout the course of New York session. As a result of this though, I just continued to look at the higher time frames to find a draw on liquidity. And actually right now I'm on replay trading mode, so the 4-hour chart's gonna be a little messed up. Let's actually do this. Let me draw a circle for where we are in current price action at the moment. All right, so on the 4-hour chart, we are right here at this level around 9:30 a.m., which is again market open for New York session. So we're about to trade right into this 4-hour gap. We have this 4-hour fair value gap that at the time was unmitigated. And again, we're trading up here at this blue line, and we're going to trade into this fair value gap. I'm going to look for one of two things. This is going to be my condition. I'm going to look to see if this gets respected, because this is the 6 to 10 a.m. candle. So market opens at 9:30, 10 a.m. is obviously 30 minutes after that. I wasn't going to take any trades until probably after 10 o'clock to see how this gap got respected. So we're either going to do two things. We're either going to bounce out of this gap and come take these highs, or we're going to inverse this gap and come lower, maybe into this fair value gap on the 4-hour time frame that is unmitigated. Or on the 1-hour time frame, we also had some lows over here. Let me just draw that line real quick. So I think I marked out this low. Oh no, I'm sorry, it was these ones. So sorry about that. So yeah, we had some relative equal lows right over here. Well, not even. We had some lows right over here that I really wanted to see get taken. And that's exactly what happened. So once again, on the 4-hour time frame, I'm looking for us to either bounce into this gap and come back up to take out these highs, or we're going to inverse this gap and take out these lows. So ideally what I'm waiting for is a sign, a confirmation of us heading in one of these directions. And then I'm going to wait for a retracement and then hop into a trade and just catch a continuation somewhere in this level to the upside, or catch a continuation to the downside and catch a trade over here. Okay. So that's essentially what I'm going to be doing from now on with my new discretionary model. I'm going to mark out two different points, either above or below. Well, one above, one below where price currently is, and we're out of whatever gaps we're trading out of. I'm going to wait for confirmation that we're heading in one direction, and then I'm going to try to catch a continuation model and a continuation trade in the direction that we're, currently going, trading with the trend, which is a lot safer. It's a lot easier. And again, you're also waiting for that confirmation. So it's just a lot better psychology wise. It's a lot better RR wise, a lot better for your win rate. So that's essentially what I was doing today. So again, we're trading up here at this blue level. I'm waiting for us to see how we react to this fair value gap. Let's go down to the 5-minute time frame. Let's also get rid of some of these lines, because we have this fair value gap here. Let's get rid of this blue line. So again, we have buy side liquidity up here with these two highs, and we have some sell side liquidity down here. I'm just watching to see how this fair value gap gets respected. This is my conditional. If this gets respected, we continue bullish and we take out these highs. I catch a continuation trade to the upside. If this gets inversed, we're going to take out Asia session lows and we're going to head to the downside. So let's actually do this times 1. Right at market open, we immediately tap into this gap and we start going through it. On the way, we create a fair value gap though. And this is a 5-minute fair value gap. And at this point, I want to see this fair value gap get retested and respected, because I have a pretty strong idea that we're going to continue down to the downside and just take out all of this sell side liquidity from Asia session. We keep going though. We form the fair value gap. We come up a little, but we do not tap into this fair value gap. And I'm like, okay, that's weird. I look on the 15-minute time frame, and on the 15-minute time frame, we have another fair value gap that gets formed pretty much around the same range. So now I'm just looking for one of these fair value gaps to get retested. Doesn't have to be both, because they do overlap a bit, but the 15-minute they do overlap a little bit, but the 15-minute fair value gap is a little bit lower. So I'm looking just for at least one of these to get retested. If it's both and they both get respected, boom, that's perfect. Oh, I just freaking skipped ahead by accident with the 15-minute. But we continue dumping downwards, and we do not even get anywhere close to retesting these fair value gaps before hitting our draw on liquidity. Once we hit that draw on liquidity, I'm like, all right, bet. Let's just see what's going to happen. Maybe we reverse. Maybe I can catch a continuation to the buy side liquidity up there. But no, we just start ranging. And actually, throughout the entirety of AM session, we only made 2 fair value gaps on the 5-minute time frame. That was this one up here, right around market open, and another one right here. After that, we just ranged literally the entire day. Let me actually just put it in 10 times and just play this shit out. Like, we literally just ranged around this area and consolidated for hours, not making any moves to the upside or to the downside. We literally just stayed around this level. We also had this new day opening gap over here, so I knew that at least this new day opening gap and the Asia session lows would be pretty strong draws on liquidity, especially if we broke through this fair value gap and just disrespected it, which we did. Ideally, I would have hoped for a retracement into these, again, PD arrays up here that were unfilled. We would have displaced maybe lower out of it, and then boom, I would have caught a short, had my stop above it, targeted a 1-to-1 or something like that. Or even if I had a better entry, it would maybe look something like this, a 1 to 1.5. And following dynamic risk management, I'm going to be, when I get back into my evals, I'm going to be trading with $1,000 of risk. So ideally, this trade would have caught me like $1,000 to $1.5K on my evals, but it's okay. I'd rather sit on my hands than trade without confirmation and trade without a retracement. Because say I enter without a retracement, or without waiting for that retracement, and I have my stop, you know, just somewhere random for RR. If we end up coming back up to test these fair value gaps, I'm cooked. I'm gonna get stopped out. So you always want to wait to make sure that PD arrays are getting respected, and then wait for confirmation that we're heading in the direction that you think we're going in, that we're supposed to go in, if we're respecting those PD arrays, and then boom, you catch your continuation coming out of that gap. So it's pretty discretional, but it can be very, very rewarding if you do it right. You can have a very high win rate if you do it right, and that's what I'm going to be looking to take. So again, this is just bad price action to me. Even throughout the morning as well, I was texting my friend who I trade with, and I'm like, dude, like, this delivery is shit. Ideally, I would want to see us, you know, retest these fair value gaps, respect them, and just actually create a range for the day. But for all of New York, we just pretty much consolidated, which is fucking disgusting price action. But it is what it is. there's always gonna be tomorrow. The market's always gonna be open, you know, the next day. So I'd rather wait, sit on my hands, protect my capital. So again, bad price action, I will always prefer to sit on my hands rather than try to force something that's probably not even there. And definitely gonna try to just do a better job of that and prioritize that while I have my fundeds, or my eval accounts, I should say, and while I'm on my way to getting funded. So I'll definitely keep you guys updated throughout the journey. If I do take any more trades, I'll do recaps on those, yap about those. And this weekend, I'm definitely gonna try to get another episode out for the concepts and confluences playlist, I guess, course. I don't even know what to call it anymore. But if I don't take any trades tomorrow, I'll try to record a backtesting session and try to get a video up for that. So let's see.